we're going to look at some transactions and test them to see whether or not they fit within the definition of revenue. The first example is borrowing $3,000 from the ANZ Bank. So $3,000 cash has come into the business from the ANZ Bank. It does increase assets. Assets go up by $3,000, so part of the definition has been met because it is an increase in assets. However, it leads to an increase in liabilities. The loan is a liability, so owner's equity is not affected by this particular transaction. So it cannot be a revenue transaction. Owner's equity has not been increased. Here's another example. Let's test this one. Capital contribution of $5,000 cash. That means the owner has injected $5,000 cash into the business. Well, it does increase assets. So that part of the definition has been met because there is an increase in assets. And there is an increase in owner's equity due to this capital contribution. Owner's equity has gone up. But it cannot meet the definition of revenue because the definition excludes capital contributions. And this is a capital contribution. So it does not meet the definition of revenue. Here's another example. GST collections. The business must have sold stock and received some GST. With the sale of that stock, let's just consider the $400 GST. It does increase assets, $400, so that part of the definition is met, an increase in assets. But it leads to an increase in the liability of $400. The GST liability has been increased. The business has to, in effect, pay this $400 to the Australian Taxation Office. Owner's equity is not affected. Hence, it cannot be a revenue transaction. This next example, interest revenue. Interest revenue, that would be, for example, when the business invests cash into, say, a high interest account and receives interest on the cash in that particular deposit. So it has received cash of $800, so assets do go up by $800. Hence, one part of the definition has been met, an increase in assets. And it does lead to an increase in owner's equity due to this revenue activity. So it does meet the definition of revenue, an increase in an asset which leads to an increase in owner's equity. It is not a capital contribution, so it does meet the criteria of the definition. Here are some common examples of revenue items. In a trading business, the most common example is definitely sales. The sale of stock. That is the major revenue activity in a trading business. However, from time to time you will see other examples of revenue, and these include stock gain, interest revenue we've just talked about, discount revenue, profit on disposal of non-current asset. More explanation of these revenue items as the year progresses. So in summary, sales revenue is the business activity that works to increase profits. Profits belong to the owner and work to increase owner's equity. And revenue is defined as a transaction that leads to an increase in owner's equity, excluding capital contributions. This is the end of this video discussion.